Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Friday, December 9th. Stocks on Wall Street are erasing most of yesterday's losses in early trading. They're following the European markets higher after the Eurozone nations agreed to a new treaty with tougher fiscal rules. We'll fill you in on the details in just a moment, but first we have some data on international trade to tell you about. The U.S. trade deficit narrowed for the fourth straight month in October to $43.5 billion. That's the lowest level this year and roughly in line with estimates. Exports fell by 0.8% from a record high, and imports declined at a slightly faster pace from the previous month. But the trade gap for September was revised sharply higher, which could mean that third quarter GDP growth will not be as strong as the 2% initially reported.
Despite the economic data, investors remain focused on Europe after EU leaders hammered out a new fiscal compact at the summit in Brussels overnight. Of the 27 nations currently in the European Union, all 17 that use the euro currency, plus 6 others, agreed to the deal. Hungary, Sweden, and the Czech Republic reportedly have not yet committed, and the United Kingdom rejected it outright, saying it is not in the country's interests. The intergovernmental treaty will put in place new fiscal rules, as well as automatic sanctions for countries that go over their deficit limits. The deal also calls on countries to make an additional 200 billion euros available to the International Monetary Fund, and it aims to make funding from the European Financial Stability Facility available more quickly in order to help bail out struggling nations. Separately, Croatia was admitted as the 28th member of the European Union.
As the EU summit in Brussels concludes, the euro seems to be giving back some of its earlier gains against its rivals in the currency markets. Right now, it's little changed above 133 against the US dollar. And as the dollar regains its momentum, it's driving commodity prices back down. Crude oil is slipping back below $98 a barrel, while gold is now treading water at around $1,715 an ounce. Meanwhile, US government bonds have reversed some earlier losses and are now back around the break-even mark. The yield on the benchmark 10-year Treasury note is holding steady below 2%. But we are seeing some steep losses across Asia, led by a nearly 3% drop in Hong Kong. Investors there are showing some concern that the agreement on a deeper fiscal union among European countries was not unanimous. We're also seeing a continued slowdown in China's economy after readings of industrial production and urban fixed asset investment both rose more slowly than expected.
Let's finish up with a closer look inside the U.S. market. Financial stocks are leading the rally, and Morgan Stanley is the biggest winner in that sector, up more than 5%. Citigroup and Goldman Sachs are both gaining more than 2%, while Bank of America and J.P. Morgan Chase advanced by about 1.5% each. However, we are seeing some weakness in the technology sector. Texas Instruments is slumping more than 3% after the chipmaker cut its sales and earnings forecast for the current quarter, citing weak demand across different markets. Rival Altera is also losing ground after cutting its own revenue outlook. But the biggest loser in early trading is DuPont, sliding more than 6%. The conglomerate said that global economic uncertainty is causing slower growth in certain segments, forcing DuPont to lower its profit guidance for the full fiscal year. That's the latest from Weiss Research. Have a great trading day and a fabulous weekend.